It was billed as one of the most exciting jobs in finance, the challenge to break Britain's growth deadlock. And Mark Carney was a Bank of England governor with new ideas he didn't waste time trying out. From forward guidance to plastic money, the Canadian number cruncher earned a reputation as a pragmatist.
In terms of his monetary policy, he was very much a disciple, or you could say loyal member of the Global Central Bankers Club, carrying out a 2% inflation target at a time of massive disinflation in the world economy. So the result of that was keeping interest rates pretty well near zero. And that in turn had all the effects we know about in driving up asset markets and housing booms and everything else.
Carney's early career in investment banking with Goldman Sachs took him all around the financial world. While at the Bank of Canada, Time magazine named him one of the world's most influential people in 2010 for helping keep the country's banks safe through the global financial crisis. At Threadneedle Street, his record was mixed. The city sneered at his forward guidance scheme to only consider raising interest rates when unemployment fell to a certain point, when the Bank of England failed to raise rates when it said it would. He reined in mortgage lending to head off a boom-bust in the property market and switched Britain to plastic banknotes, ending 320 years of paper money. And Carney played a key role reassuring markets following the 2016 Brexit referendum. But he sometimes gave mixed signals on interest rates and was fiercely criticised for pessimistic prophecies about what could happen business-wise when Britain eventually leaves the EU.
Opportunity lost. During these years, the UK didn't have to follow the same policies as the ECB and the Federal Reserve. It could have been more like a Switzerland or a Germany back 20 years ago, forging its own distinctive policy against the consensus. But that certainly didn't happen under Mark Carney.
Perhaps with an eye on the future, Carney became vocal on the need for the financial sector to do more to tackle climate change.
I would say we're in a climate crisis, just like a financial crisis, where action needs to be taken.
And that will become his focus when he takes up a new post as the United Nations Special Envoy on Climate Action and Finance. His parting shot as governor? Coronavirus intervention, cutting interest rates in a coordinated response with the Treasury as part of a concerted effort to help households and businesses tackle the unfolding economic crisis. Meanwhile, with the UK economy facing its weakest growth for a decade and Brexit ahead, the city might be hoping that Carney's successor, Andrew Bailey, will be a safe pair of central bank hands. Juliet, Mann, CGTN, London.